Good morning, guys. I hope you're well, and welcome to today's edition of the Forex Market Outlook. My name is Alejandro Zambrano, and some of you guys know me probably from the past when I was working for Daily FX, and some of you guys are new and probably know me from Amana Capital and TradeCaptain.com. So what we're doing today is we're going to provide you guys with a free Forex market outlook. And we're going to take a look at currency pairs like the euro dollar, the pound dollar, and of course the New Zealand dollar versus the USD, which is probably one of the biggest mover. Well, it is actually one of the biggest mover of the majors today. So we're going to take a look at that. We're going to also spend a few seconds on the economic calendar. Now, before we start, as always, I need to stress that trading financial markets is unfortunately extremely risky, and you can make money, but you can of course also lose money. So please bear that in mind and don't trade with money that you cannot afford to lose. Okay, so we should be live as well here, of course. And if you want to, it would be great if you could just let me know if you can see my screen and hear my voice as well. If you want to ask me questions, you can either just log in with a YouTube account and ask questions to the right, or you can always just send me messages to AlexFX00, and I'll answer them there. Well, I see the read question and I'll answer them. Or you can just reach out as well via the Trade Captain Twitter. So, good. Let's get going here. And good morning, MI, and good morning, Kenny. So let's get going here, guys. Okay, so this is the New Zealand dollar versus the USD, and we have a big day today, a bearish day, and it's because of the election outcome and how they're going to form a new government over there. The market is not liking this, and you can see how the New Zealand dollar is down with 118 pip or 1.65% in since the close, really. So not the last 24 hours, but since the close, and this is just a daily chart. Now, when we examine this daily chart, you can see that we're clearly trading lower and lower and lower, and we just took out last week's low here, a low created on October 10th. Now, when you take out one low, then the market is usually going to target the next low or next relevant support level. Now, the next low is down here around, the actual low is actually at 68.30. But if we zoom out here, you can see that price bounced here in December 2016 at 68.73, and then it kind of bounced in March of 2017, and then here a few months later again. So this is some solid support. So we just took out that level, and most likely the currency will try to aim for these lows in the next 4 weeks or so. It's impossible to know how quickly this is going to go. You have as well another high here, which is the high created on the 17th of May this year, and that is the 69.51 level. And I think that's probably the most likely and easiest target for traders. Now, should we say sell right here, right now? Well, there's definitely some people that will probably sell at these levels, right? So some people are gonna sell here, and some people are getting stopped out. So people that were long with a stop here, they're getting stopped out now, and these guys are getting forced to step aside. And I suspect that at least maybe in the next few hours or so, we could potentially reach the 70 level. And then maybe from the 70 level, we have some sort of a bounce. And it's that bounce really which I find interesting. Because I do suspect that the market is a little bit oversold in the short term. And I would prefer that we have some sort of a bounce. So I'm going to load the pivot points. I'm just gonna change them to the daily pivot point, and I'm also gonna change, I have a exponential moving average which is based on the daily, and I'm gonna change that to make that a 4-day EMA. Here's where that line is, and let's actually make it a little bit thicker so we can see it like that. So according to the pivot point system, we're way below the S2, and 82% of the time we don't trade below the S2. And I'm gonna load the S3 level, so S3 and R3, and we're below the S3. I think the likelihood of closing or remaining below the S3 on a normal day is less than 5%. So it's probably not the best time to sell here at these levels, even though because of the circumstances, I suspect it can go down to the 7th level. So what levels can we look at? Well, if the market would bounce without moving substantially lower, then we can take a fib. So we take a fib from this high to this low, and I would guess maybe 70, 80, 71. These are levels where the market might look to get involved again on a bounce. Just need to be ready that the market could spike all the way up to 71.20, if not a little bit higher. But as long as you trade below this high up here, which is the 71.89 level, then I think it makes sense that the market is going to be bearish. So this is my outlook for the New Zealand dollar versus the USD. So might go up a bit, and then like this, and eventually 69.51. However, if it hits the 70 level, it will touch this level, and then maybe tomorrow, the only thing is going to be happening is going to go up to the breakout level. So maybe 70.60 again, and then from 70.60 looking to go down again. So we need to adjust the fib levels if the market goes down without having any sort of bounce. And that is the New Zealand dollar versus the USD. So let's save this chart. Let's take a look now at the euro dollar. So this is your euro dollar, and the euro dollar, you've probably seen it before. A lot of people are talking about it, and I'm going to show it to you again. I suspect it's a little bit of a tricky situation, but this is a daily chart. A lot of lines, right? Let's get rid of some of these lines. So you can see this is a big head, potential head. This is the left shoulder, this is the right shoulder. And it should be quite straightforward. So if the market takes out this low, which is the 1771 level, this market could potentially have a steeper pullback. Again, take out one low, and the market is gonna try to target the next set of lows. So you have another low down here. Here, and then you have another set of lows here. So this could be an interesting setup. And then you have these highs like this. I'm just gonna make this a little bit less colorful. So from a technical point of view here, because we're in this uptrend, it doesn't really make too much sense to try to actually trade against this for now. But take out the low, and the market here could potentially move down lower in the next few days, and again target these different levels. On the other hand, if the market manages to remain above the 1670-ish level, then we could potentially just see a little test of that high again. So this is my outlook for the euro, and because it is trading sideways, it's much more trickier than usual. I personally am quite optimistic on the euro, sorry, on the dollar. You can actually read more about it if you check this out. So if you click on here, this is the home page, and here's our quarterly outlook. You just need to register for Trade Captain, and you can actually read the outlook. It's the quarterly one is the euro, the pound, and New Zealand dollar, and as well the Aussie dollar and the dollar yen. Now let's go back to the charts and let's speed things up a bit here. So here's the pound dollar. So yesterday's number, wage growth being slightly better than expected, caused the pound to gain a bit. It's comforting for the Bank of England that the unemployment rate is at 42-year lows, and wage growth is doing slightly better than expected. So we're having some growth in the economy. And again, this could potentially lead to a rate hike. At least this is what the central bank has communicated to us. So from a fundamental point of view, I'm quite optimistic on the pound. However, though, on the other hand, you have Janet Yellen. She also saw high wage growth in the U.S. I think wage growth increased with 2.9% year on year, which is actually better than what we're seeing in the UK right now. And there's a relatively even battle between these two central banks. So I do like the dollar against weaker currencies like the New Zealand dollar and the Aussie dollar, but I also like the pound against weaker currencies like the Aussie dollar and the New Zealand dollar. Now technically here, the trend is short-term bullish about 31.21. Here's how the market reacted following yesterday's unemployment rate numbers, and the market bounced a bit, but now it's testing that low again, and it should be quite straightforward. I think in this zone traders are probably buying, whereas if we take out the low, there is a genuine risk that the market just goes down lower, and that is the pound versus the US dollar. Now let's take a look at the dollar yen. So this is the dollar yen, and I was actually bearish here for a few days last week. So the market did go down, and then I said, well, if we go up to the same levels, the market is probably going to try to sell. But they didn't. Instead, the market just took out the high and turned bullish. And going forward now, if you look here at this from a 4-hour perspective, actually, let's look at the daily. So is this a major high here? Or are we just gonna be capped here and move down substantially lower? Because if you look here, the market is, and this tends to be capped at these levels. And if the market takes out the low here created last week, then I suspect it should be quite a good Christmas and a good fourth quarter for the yen. At that point, the market, take out the low, aims for support, and you'll see something like this. But until that happens, we need to give the trend the benefit of the doubt, which is that we could potentially bounce from these levels and then head up higher, something like this. This level here is the 112.26 level, and that is the dollar yen. Next market is the Aussie dollar, and here's the Aussie dollar, and I'm personally finding this market a bit complicated. I was bearish a few days ago, bearish below this level, but the market took this level out on the 13th, and 13th was Friday last week. So over this whole week, in essence, I'm just trying to ignore this market just because it's not really agreeing with my outlook. And I found it like this: if you're trading a market and it goes well, then continue to trade it. But if you made one error and then you make a quick like a second error again, or a problem, and not estimating the market correctly, then you're probably better off ignoring that market for a bit. I've never really seen that, at least not for me at least, that works out fine really to venture back in the same market immediately after like 2 quick losses. So I'm gonna be boring here, and I'm gonna give you these levels so you have these levels to work with, but it doesn't unfortunately need to I don't really know exactly if it's gonna go up or down. If anything, it's probably going to be choppy. And yeah, keep an eye on 78.15. The market could head up a little bit higher. Had some Aussie employment data out overnight, better than expected. Took out 78.15, and the market might decline to 77.67. And this is the Aussie dollar versus the USD. And my preference is really for this to trade sideways, and then we'll look for some sort of a break. Here again is the New Zealand dollar, which we covered. Let's take a look at the CAD. So here's the CAD, and you can see here a bit choppy. So let's focus on the daily. In fact, when things go choppy and the market does not respect the levels you're watching, I found that is better to work with the daily. Ideally, or usually, you break a daily level and you'll be good. At the same time, you put a stop loss below a daily low or a daily high in a downtrend, and you will usually be okay. So let's wait for that. Now the market is short-term bullish above this low. You can see something I found interesting. The market declined strongly as the Central Bank of Canada decided to increase interest rates, but then bounced very quickly as well. So this looks like a V-shaped type of low, and it could be that we're gonna have a bigger correction, and we'll head up to 130, 132 in the next few months. Because of this, take out the high, and it can be interesting. Now, for now, in the short term, above this low, I guess the market could head up a little bit and maybe do something like this. Take out the low, and you may have some sort of a correction like this. Some sort of a pullback, actually. Because of the intensity here, it looks to me like head, some sort of a left shoulder, maybe some sort of a right shoulder. We can use the fib to get us an idea of really how much lower we can decline. You got your 50 level, which is pretty reasonable level. If we're gonna go all the way down to 122, it's probably gonna depend on what happens with crude oil, and it's probably also gonna depend on if the Central Bank of Canada is looking to increase interest rates. I personally think that the market is a little bit ahead of itself. I think last time I think it anticipates, I think maybe 2.5 rate hikes before the end of next year, or something like that, and that I don't really believe. Okay, let's see if we can answer some of your questions. So we just covered all of the main currency pairs because this is the Forex Outlook here at tradecaptain.com. I'm gonna try to do these webinars once a week or so. We are in the process of hiring a technical analyst. So eventually we'll have the webinars at 9 o'clock every day of the week. Myself, I'm gonna do some webinars once in a while here. Now let's see if we can answer some of your questions. So we're gonna check out what you have written, and okay. So we have MI. So, oh, nice. MI says, I've known you for about 3 years now, Alex. I guess it's from the Daily FX Time. And UK Kenny. So if you have any question, guys, you're most welcome to write. So to be able to write here, you just need to have a YouTube account like the one I have here. You can, of course, write to me via Twitter. So let's check Twitter. So you can write to me here at AlexFX00. Just tweet to me and I'll answer the questions found. Oh, nice. Yes, Daily FX Time, I remember them very well. That's where I learned most of my what I know about the markets and analysis. Okay, so Yuki Kenny said, can we take a look at the euro yen? Cool, so let's do that. Okay, so this is the euro yen and it's a daily chart. And a bit of a tricky situation here. Overall, a bullish trend on the daily. So I like to begin with the daily and then work myself down to the shorter time frames. But I don't think we're gonna do it today. And I'm not even sure if I'm gonna get this arrow to work. There we go. So here you have some sort of a bullish bias, but since September 26th, this market is stuck here. Um, could be like some sort of a bullish flag or something like that. And because the overall or overriding bullish trend, I suspect that if we take out this high, this market could head up higher. We could probably just look to the left here and identify the next target. So you have a high here, which is the 136.97 level. So that could be a potential target. So take out this high and the market can go up, down, and continue to head up higher. And on the other hand, if we take out this low, which is the 131.78 level, then the market could potentially move down to 129.43. So this is the two levels I would watch. You can see that we actually visited this level just a few days ago on the 16th. So the market is just the only two real levels that this market cares about is this level and this level here. So we can venture in the short term and we could potentially even look to buy the lows and sell the highs, but it's not really the way I trade the markets. Okay. All right, so I don't think we have any more questions. Good. So then we're going to wrap things up. Kenny and MI, thanks so much for joining me. I hope you have a brilliant day. And I will probably not be back next week. And the reason for that is that I'm going to be traveling. I'm going to be in Beirut to meet some of the team from Amana Capital. And then I'm going to go to our headquarters in Dubai to do a seminar in Dubai. In fact, I'm doing a seminar in Beirut as well. So I'm not sure I'm gonna have the time to do a webinar like this one, but most likely after that. So if we take a look at the calendar, probably the first week of November, we'll do something on a Thursday here. So you're most welcome to join me. And in the next few weeks, a bunch, you'll hopefully see someone doing webinars every day, and we'll produce even more content. The website, as is new, do help out. So when you have the opportunity, follow Trade Captain's Twitter, retweet myself as well, and maybe share on Facebook and maybe other forums and places where you interact with traders. That would be very kind if you could do that. Okay, guys, see you later. Thanks.